Peter Wagner is the owner of Roundabout Travel Agency. It is registered value added tax vendor, which is important. And they have been in business for the past 10 years. Rata has never been in a situation where VAT was received back from the receipt of revenue. So therefore, you can assume that the VAT control account always have a credit balance. And if you then see that as a credit balance, you must actually treat VAT all under liability. So VAT input will reduce the liability, VAT output will increase the liability. The office is run by Mrs. Wheely, a very capable administrator and accountant. All transactions are concluded with South African residents, unless stated otherwise. All local travel bookings are done with other VAT vendors. Now, local. Credit accounts are created after service delivery has taken place or credit invoices have been received, if applicable. Customers, that is creditors. Customers are invoiced when the booking is made. So this is slightly different. When they make the booking, the creditor account is created after the service delivery has already been received, or the credit invoices. But customers are invoiced when they make a booking, so nothing has happened as yet. All bookings made by prospective travelers must be accompanied by the full non-refundable amount of the planned trip. So when they want to go on a trip, they must decide what trip they want to go on, and then they have to pay in advance. Any outstanding debtors balance that will occur should the traveler, whilst on tour, and incur unforeseen additional costs. So they say, because they actually prepay for the tour, if there is a debtors balance at the end of the day, it will be that the debtors balance came about as a result of certain invoices that was created during the course of the tour. So the touring company paid for it, and they're going to recover that money from the traveler once they actually return. These balances should be settled as soon as possible after the trip has taken place. It is the policy of the company to recognize revenue at the date that the tour was completed. Makes sense. You cannot recognize before you haven't provided the service as yet. The accountant keeps track of prospective travelers by summarizing on a separate Excel spreadsheet for each tour the name of the traveler and the amount received per customer for the trip. She then reconciles on a monthly basis the amounts received in respect of trips not yet undertaken with the income received in advance account in the general ledger. At the beginning of February, just before the financial year end on 28 February, Mrs. Wheely became seriously ill with malaria. You're a friend of Peter and you're going to help them with some accounting entries. Upon arrival in the office, Peter gave you a box filled with source documents supporting the transactions concluded in February, which were not yet been posted by Mrs. Wheely. You sorted the documents in piles and started to process the transactions. Let me just shout for you. So what are we supposed to do? We are supposed to take those transactions and analyze that in this format in the accounting equation. They want a source document, which is the first column, an account description, debit, credit, what, equity plus minus, assets and liabilities plus minus. And again, if something decreases, it must be indicated by ways of brackets. Right, pile number 1 is all about receipts. Receipt 123 for an amount of 11,400 made to H. Musa. The description was Zanzibar trip for the period 12 to 19 March 2018. Guys, our financial year end is 28 February. So this full amount is then for a trip that he has booked, but we cannot recognize the income as yet. So it's income received in advance. Receipt 123, bank debit, which will increase assets with 11,400. Cash flow has taken place, so we have to pay over the VAT, credit the VAT, increase the liabilities with 1,400. The VAT included there, 11,400 divided by 1.14. Just a moment. I had to tell you the VAT rate that you're supposed to work with, so we are going to use a VAT rate of 14%. So that amount of 11,400 Rand, if I divide it by 1.14, it's going to give me 10,000 Rand income received in advance, a liability account, times 14% is going to be that output of 1,400, and then the total amount received in the bank, which will increase my assets debit against bank, 11,400 Rand. Great, the next one, receipt 124 for an amount of 3,400 Rand made out to G. Mugabe, description Zimbabwe trip for the period 10 to 17 January. Now, has that trip already taken place? Yes, it is. They also tell you that this amount that was received now from her represents the outstanding balance on her account. So that invoice has already been processed. She's already been given a statement with the amount that she owes. So this is just to settle the outstanding balance. So therefore, we're going to debit bank with the amount received and credit debtors control with the amount that she owed, 3,400 Rand. Pile number 2, credit invoices received. So this was from suppliers of services. Invoice 257 for an amount of 18,600 issued by Blue Danube Cruises. Description, riverboat cruise 10 to 12 February 2018. So we've already had the cruise, so therefore we have to raise the expense. BDC is a German company with no registered office in South Africa, so that means that that invoice that we're going to settle can never have VAT included because it's not a South African VAT vendor. So the full 18,600 is going to be part of our expenses. You can call it boat cruise expenses or any other type of expenses, but it is in our statement of profit or loss. It's going to decrease our equity with 18,600 and increase our creditors with 18,600. Invoice 376 for an amount of 44,800 issued by the Cape Peninsula Hotel in Cape Town. Accommodation 15 to 22 January. Have we already stayed there? Yes, we did. So this is a plain expense that will be subject to VAT because they will be a VAT vendor. So accommodation expenses, which will be expensed, it's going to reduce our equity, is going to be the VAT exclusive amount. 44,800 divided by 1.14, 39,298. Creditors will be the full 44,800 and 39,298 times 14% will be the VAT input, which is going to be a reduction of our liabilities. In this case, I've stated very clearly that the VAT always has a credit balance. Therefore, you have to do this question. You have to reduce your liabilities and not raise an asset for that specific item. Invoice 508 for an amount of 75,800 from the South African Airways for flight tickets dated 1 March 2018. No payment has been made as yet. Well, if we are going to pay them now, it's going to be a prepayment. So why not just wait another day and pay them at the date that this account is due? So we're not going to pass any entries at this point of time. File number 3, electronic transfer of funds. Reference number ABX 1357, payment of 32,500 on 16 February made to the Durban Kings Hotel. Description, accommodation 14 to 21 March 2018. So something that is lying also in the future. So it's a prepaid expense. We've already made the booking and we're going to pay them now. We did pay them now. The EFT has already been made. So here's our source document. All of it will be prepaid expenses. The bank will be reduced to 32,500. The prepaid expense will be 32,500 divided by 1.14. And VAT input will be then the difference between 28,509 and 32,500. It is an input, so it will reduce our liability. It's a debit against a liability account. The next one, reference number ABZ 7384, payment of 3,400. Wages. Wages is not subject to VAT. So it's wages and expense account debit. It will reduce our equity, and bank, our asset account, will reduce with the same amount of 3,400 Rand. Reference number ABM 8477, payment of 8,800 on 28 February to property letting description, Rental of premises for the next month. So that is all a prepayment, but because cash flow has taken place, we can claim the VAT. So bank will be credited with 8,800. The VAT exclusive amount will go to a prepaid expense account, which is an asset account, 7719. It's very important that it is an asset account, not an expense account, because it's a prepaid expense, but we can claim the VAT. It's VAT input, so it will reduce our liabilities, which is 1081. Then pile number 4, credit invoices issued. Invoice 982 to the amount of 16,800, issued to Emma Lucy, description Outeniqua tour 20 to 27 February 2018. So this tour has already taken place. This must be additional charges for his account. So we are going to invoice him now. It's a credit invoice. So we're going to raise the debtor. Debtor was full 16,800. Sales revenue will increase our equity with a VAT exclusive amount, and VAT output will go to the liability account, will increase the liability with 2063.